Time to put the spotlight on Akzo Nobel as well, talk about their growth guidance as well as where they see input prices headed. We've got Rajiv Rajgopal, who's Managing Director, now joining in. Thank you so much for taking time out. Now, just to put it into context, when we had discussed this very same topic with players like Asian Paints, Berger, etc., they were very confident of sustaining double-digit growth. What about Akzo Nobel? Will we see that kind of growth for FY24?
So good morning, and clearly when you look at our results for the last year, we've ended the year growth with about 21%, even in a quarter like last year where there's been obviously a lot of aggression in the marketplace, we've ended up with a double-digit growth. So yes, on an annual basis, unless there is some black swan sort of an event, I do see that we should be poised to deliver a double-digit growth for the year, fiscal.
Double-digit growth for the fiscal, and what exactly, Mr. Rajgopal, is going to drive this growth?
Well, so I think both in our paints and coatings business, if you really look at, so let me take paints. I think the drivers will continue to be brand distribution, our ability to work with the influencers. We are doing a lot of work on digital. We will have new campaigns closer to the season, closer to Diwali. So really, I think, both, if you take the quarter gone by, we've actually grown pretty high, double digit in premium. We had a bit of laggard growth in the economy and mass market where we've made some corrections. Our focus on ensuring our distribution, enhancement or increase to the next set of towns is in progress. We are seeing some good results even as we speak now. So I think the drivers continue. In our coatings business, whether it's a marine protective, automotive, we've seen a huge rebounds, in the last many quarters. Powder business, we are also going to add further capacities in Gwalior, right? So I think industrial coating business, perhaps because of coil, there is a bit of a slower growth. But other than that, I think all the businesses are well poised. So suffice to say, I think we've got strong plans and we continue in our journey to pursue double-digit growth.
Right. Rajiv, with the correction in input prices now, could we see rebates, discounts increasing significantly?
Actually, for the moment, yes, market is seeing a high amount of discounting in the market. So, we've seen that in the last quarter. We continue to see it even in this quarter, right? So, yes, we are holding on to prices. That's what we've seen in the industry. Depending on certain categories are seeing more pronounced discount than the others within the paints part of the business. Yeah, so yes, paints is seeing a higher discounting. But I do believe that it's still too early to predict that the long-term trend is going to be benign, raw material environment, because we've just read this morning that there's been a cut in certain crude production and we started seeing again crude slightly move up. So it's too early to predict. I think we live in a VUCA world, so it's really volatile and very difficult to predict. So we'll have to wait and watch.
And your sector also, I must say, is getting in fiercely competitive now with the entry of Grasim as well. And I believe that you're aspiring to become the third largest player from the fourth currently. With a 16% market share currently and it becoming such a competitive space, wanted to understand what gives you this kind of confidence.
So just to correct, Asha, we've got in paints about a 6% market share and aggregate would be about 7.5%. Look, I think two things. I think, it's always good to be driven by ambition as long as there's a tinge of realism in it. I think obviously for us from number 4 to move to a significantly higher spot, e.g. number 2, would mean a massive acquisition, which at this point of time, given the multiples of the PE, I think we have to be a little careful. So really, it's building one step at a time. The reason I'm fairly confident is if you look at the last year, I think we've already started the trend. And if you start looking at a 2-year trend, and compare it to the previous 5 years, you can see a sharp movement upwards on the CAGR growth. So we continue to be there. Yes, it's not going to be an easy ride. There are going to be a lot of bumps on the road, but I think we as a team are prepared for it. We are here for the long haul. Akzo Nobel, both globally and at a country level, we are completely going to be aggressive in the market. We are invested in India. We want to see India being one of the beacons for the Akzo Nobel global business.
Morning, Rajiv. Always good to have you on ET now. Let's understand what the new competition could do. Do you think the new competition is going to be sensible, or we could actually see a geo moment in the paint industry? Because everybody wants to gain more market share. I mean, if the Jindals and the Birlas are entering the market, they would like to leave their mark.
Hi, Nikunj. Good morning. Great to see all of you again. So, yeah, look, very difficult to predict whether it's going to be a geo moment or not. I think you've got to give contextually, if you look at this industry, the top four players account for almost 80% of the market, right? And we've had many entrants, we've had many players coming in. Some are doing well, to be respectful and also realistic of what's happening in the market. That said, I think each of us have put in strong growths if you take the last 2 years, and I see no reason why that will not continue. Now, on your geo moment, I think one has to look at a complete differentiator, and each of us are working on our strategies, are working on our templates, a playbook to make sure that we continue to win in the market. From an Akzo Nobel perspective, look, I think the journey has changed. I think the journey is now to really look at India in a much more serious manner in terms of how can this become a beacon of growth globally. And I think that's where me and my team are completely sort of putting our heads on the ground and really focusing on delivering strong business growth. Yeah. So on your geo moment, I do think, yes, that there could be one or two differentiators, pricing being one of them perhaps. But look at the industry. I mean, when you're a market leader with a 55% market, operates at an EBIT margin between 15 and 20%, I don't think there is too much for new players to come in unless you've got very deep pockets and you're committed. And you're committed not just to a 3 or 5 year, but to a more than a 10-year sort of a runway. Yeah? So it's not going to be as easy. I always say in this business, additional capex is not an indication of where the business can land, unlike say in telecom, where I've also worked before. I think brand distribution, the ability to work with influencers in a meaningful manner, etc., are going to be differentiators. So yes, I see some early signs of a couple of players trying to create it, but I do think that they should also expect a terrific fight back.
Why is that paint industry has not seen any impact of inflation? I look at the volume numbers for the industry and your peers for the quarter gone by, and by the way, we are still discussing March numbers here. We are almost more than 50% done in this current quarter. The volume growth is impressive.
Yeah. So I think two reasons, I would say, and when I look at it from our perspective, we've seen in the last quarter, the faster growths come in the tier 2, tier 3, tier 4 towns. And that's where we've seen a volume growth. Yeah. What surprised me was a bit of a K-shaped sort of after many, many quarters, a little more of a K-shaped sort of a phenomenon where we saw premium really disproportionately grow for us compared to our mass and economy. Yeah. So that's an area. I think volume growth is strong because, look, I think while inflation is there, even at a very headline level, India inflation is far more benign when you look at the rest of the world. Yeah. And while, yes, home loan rates have sort of gone up, etc., you're still seeing when the results come of housing, companies, you can clearly housing finance companies, the results are terrific. So clearly, the younger generation is clearly looking at buying a first home quickly, and that's an opportunity for us. Also remember that 20-25% of this business comes through the new construction, new build, right? And we've seen some terrific rebounds, and that's also borne out when you look at the last quarter, the results of some of the companies, right? The real estate companies. So in my view, I think volume growth, yes, there will be a challenge, Nikunj, in a quarter or two, because you will have obviously your base effect also plays. So 1 or 2 quarters, you could expect a little bit of a tapering. But I don't think from a long-term fiscal perspective, when I look at this fiscal, I do think that volume growth will continue to be double-digit. Pricing will no longer be the driver, because commodity costs would be stable. I wouldn't say it's completely benign unless, again, there is a sharp drop because of, say, one of the lead economies drop or some issues or challenges in some of the markets outside. We've seen even just in a few days that the larger oil players have announced a bit of cut in the crude prices and have slightly got up almost to 78 from about early 70s dollar per barrel. So it's going to be a bit of a mixed reaction. Also remember that one of the drivers is also the forex, the currency, and that's been relatively stable for Indian rupee. Yeah. So in all, I do see volume growth because I do see consumption happening. I haven't seen a significant drop in consumption. It's different by different segment, different by different pop strata, but consumption is still happening.
Great. Rajiv, always good to chat with you. Thanks for taking the time out and joining in.